Welcome back in. Stock futures rise this morning after the NASDAQ rebounded. The Dow fell slightly, but for the most part, the markets have done well for those of you who have 401ks and portfolios. But will that winning streak continue in 2022? Stuart Welch with the Welch Group joined us now and looking into his crystal ball to get some answers. Good to see you this morning, Stuart.
Good morning, Mike.
Great to have you with us. All right, let's first talk about why would someone think, or why would someone be bullish that it'll probably be a good year?
Well, there are a lot of reasons to be bullish, and I think the first one is we continue to have low interest rates. So we've been in a low interest rate environment for about a decade. That's been a big boost to the stock market. When interest rates are this low, people are looking for somewhere to get returns. You can't get it with bank CDs or money markets, so the stock market's kind of the natural place to go. I think, Mike, also we continue to have a strong economy with all the various stimulus programs. People have money in their pockets. They've been turning around and putting that back into the economy. Again, that's been very good. And then finally, the bullish sign would be, while they didn't get the $2 trillion social package passed last year, it's almost certain they're going to get some portion of that passed this year. So let's call it $1 trillion plus of new money is going to get pumped into the economy. That also bodes well for a good stock market.
All right, what are the factors that somebody might be bearish for 2020?
Yes, so you do get both sides, and you see both sides being pitched by people that are very smart. I think the first one would be inflation. So toward the end of last year, we saw inflation peak up almost at 7%. That is the highest rate of inflation in decades. That is generally not good for the stock market. For one reason is the Federal Reserve has taken notice. They indicated that they're going to begin to raise interest rates. Again, rising interest rates, depending on how fast they go up, will not be bullish for the stock market.
All right, so depending on where I'm at, where my age is and what my risk factors are, what should be my strategy heading into this year?
Well, I think you talk about the bullish side and the bearish side. What you really come down to is that no one knows. They make guesses, but no one knows for sure. And what I have found has worked over the last 40 years is to come up with a consistent program of investing in a basket of stocks that are well chosen, and then staying with that over time. And I think the one exception, I think, as you want to pay attention to it as stocks grow within that portfolio. You're going to take some profits, take those profits, put it on stocks in the portfolio that maybe haven't done as well, sort of a rebalancing strategy. But also, I think as you begin to reach retirement age, you want to begin to take some money off the table. And by the time you're retired, you want to build up, say, 5 years worth of retirement annual expenses in a safety net, or kind of like a nest egg. And if you do that, I think, Mike, you're going to be just fine.
Somebody might be in the dark about how to handle that. So you always recommend hiring a fiduciary. So tell folks what they need to look for if they're hiring somebody to help them out with their money.
Well, I think the first thing is you want to hire somebody who's had a lot of experience. I would say a minimum of 10 years of experience. It's really important that, that they've been in the field, that they do the kind of things that you do. Like a lot of people, in addition to investing, need help with financial planning, other financial matters. You want to interview 2 or 3 people, maybe talk to your CPA, maybe talk to whoever your tax advisor is, and see who might be appropriate, and visit with at least 2 to 3 people. Ideally, they would be a certified financial planner.
All right. Stuart Welch from the Welch Group, some good advice this morning as we look ahead to this year. Thank you so much.
Thank you, Mike.
All right. Still ahead now in the Good Day Buzz, how this